But we're talking about real estate, multifamily, the whole bunch of other type of investing that can be done. I just need to know to get the cash. I'm talking about tonight. Welcome. Here. Check. Please. Like. See you later some days. Now. Let's get through it. Looks like our intro is not going to start this evening, ladies and gentlemen. So we'll have to do it a different way tonight. No intro. It's all right. I'll do a different intro tonight. How about that? All right. Let's see if I can do that one. I don't think so. So it looks like we're out of luck for the intro, and I don't feel like much trouble. It's all right. Using outside, we can have glitches when we go live every now and then. All right. Allie, let's get to it. In the house. Thank you so much for being here. All right, looks like we're having a little bit with the chat room. But I don't know what's happening tonight here so far. But hold on, ladies, we have to check some technical difficulties. Let's see something real quick. I have to run to the YouTube channel, make sure I have it. All right. Okay, guys, I'm back. I don't know what's happening tonight. We have technical difficulties, and I don't know why, but thank you so much for waiting around. Thank you so much for being here. Hopefully, you can hear me out in the chat. We're having uh, things have been frozen. It also appears my audio's going in and out. My screen has been flipped, so I don't know what's going on in the StreamYard here, but hopefully I'm back on. Let me know in the chat if you guys can hear me. We have Gabe Jennings in the house. Can't hear you, my friend. Not that good as well. Exactly, the video has been decreased. which is a bad thing. Hold on, let me do something else, ladies and gentlemen. I gotta try something. All right, well, I can't change the video, but hopefully we're good for now. Well, I want to thank you for hanging in there because it's real estate investing time. Multi-family, not just real estate investing. It's real estate investing for single-family homes. It's just, well, that's kind of easy because you can flip homes nowadays because property values are some people are getting a little older. You can find single family, but the multi-family is where you want to create wealth. You want to make money. So we're going to talk about that tonight. So Gabe Jennings, thank you so much for being here, and we're going to talk about it. The audio is going in now. Thank you, Tanisha Lyles. Hopefully it's corrected. Tanisha Lyles, Miss Price is Right, is in the house with the icon next to her name. Thank you so much. Reply in the comments. That's right. I was letting you know, no, we're froze. No worries. We're on standby. Thank you so much, Tanisha Lyles. I appreciate that. Curtis Davis, Mr. Financials in the house. Thank you so much for being here with the icon next to his name as well. Hey, Curtis and SSN family. Victor Marrero with the icon next to his name with his entry of Let's Do This. All right, welcome, Victor. I thank you so much for being here this evening. All right, Tanisha, what's up? Okay, ladies and gentlemen, this right here is the subject matter that today, I'm just going to call it what it is. Today, I'm on YouTube looking around, getting ready to put in the update for the live stream to let people know, the live streams tonight. And I see this guy named Cardone. Everybody knows who Grant Cardone is. You at 85%. Thank you so much. Yeah, I don't know what's going on with this stream right now, but it appears that we don't have a strong enough signal attached at this point. Something's going on with the internet. But hopefully you guys can hear me. And you guys have heard of, some of you may have heard of this Grant Cardone guy. So today I see this real estate investing. He's doing a live stream and he starts using these words like cap rate, words like DSCR, and those type of words. Let's just call it what it is. For most people that are in real estate or new in real estate and multifamily, you may see things for sale like on the LoopNet, the CoStars, and places like that where you might see cap rates. But the reality of the situation is at that purchase price. So let me get into this because this kind of rubbed me the wrong way, right? Because he starts doing this mumbo jumbo stuff to confuse people, and then of course says, "Well, you can invest with me or bring me your properties, so I might be able to buy." And I'm sitting there like, "Wait, you just confuse people with this cap rate, debt service coverage ratio, and all this stuff." And I was just like, "But it's so much easier than this, ladies and gentlemen." So welcome to the Stop Troubling Now Nation Money Make Mondays. You don't have to know all this stuff. You just got to understand a cap rate. In fact, I'm going to go to Investopedia. We'll just make it nice and simple for everybody, all right? 85%. Thank you so much, Victor. Welcome in. Exactly. Same to you. Yeah, so I'm gonna actually show you guys. We'll go to Investopedia, all right? That's what I'll do. We'll just go that route. You don't have to go with my definition of this stuff, but I told you, somebody asked me about cap rates before, and if somebody's selling me $1 million property and then they tell me I'm earning cap rate of 4%, what that means to me is, okay, I get to make what, 40 grand a year or something? Seriously? I mean, that's what it means to me. I'm like, I'm sorry, that's not working for me, right? So let me put this on the screen for you guys, because it's not really all that convoluted, all right? So this is what rubbed me the wrong way because of the way he was explaining it. And I'm like, wait, he's confusing people, trying to make it seem like the cap rate matters all that much. It doesn't matter that much, all right? It does not matter, because the bottom line, a lender is going to loan you based on, if you have a multi-family property, they're going to give you a loan based on your net operating income. That's after everything's left over from your expenses. And then, do you have enough money to pay the loan that you're seeking? That's basically the thing. But he's going all around the world on this nonsense. So let me give you an idea. I'll just start out with their simple explanation. The capitalization rate, which is what a cap rate is, also known as cap rate, is used in the world of commercial real estate to indicate rate of return. So what I'm saying, it's just rate of return. That's the way I always looked at it. I never looked at it any other way. So a guy says, "Hey, Eric, I got $1 million property I'm selling you, and it's 4% cap rate." I'm like, that's 40 grand a year. I mean, come on now, that's crazy. I can get a 4 unit apartment complex that has only make $500,000 a year and get 40 grand a year. Come on now. So don't be confused about all this talk about cap rate, okay? There's nothing to be afraid of. It's nothing more than, like I said, we'll keep it simple. $100,000 property. Let's say it's a 2-duplex. A guy says I got a $100,000 property and I got a 5% cap rate. Okay, great. That means what? $5,000 a year? Come on. This is not rocket science, all right? It's not really all that. All right, ladies and gentlemen. So I just want to give you an idea, because the cap rate, here's the calculation in reality. It's the net operating income divided by the current market value. So when you're doing real estate investing, bottom line of the story is you want to be able to figure out, if I buy this property for X amount of dollars, I'll use the 100,000 so everybody can stay with me here. If we do $100,000 and I got to put down 25%, so I got to put down 25%, I owe 75%, so that ends up being a 75% loan to value. Okay? Simple. You guys are with me on that, right? Now, I go to the bank and they say, "Okay, Eric, we'll give you, let's call it doesn't matter what numbers, I'll just make something up. I'll say 4% on that $75,000. Okay, that's what we're going to give you a loan at. But before they're going to give me that loan, they're going to say, "Hey, where's the accounting? Where's this information? How much does this property make for you? So we can make sure it meets our criteria." Some of that criteria is going to be, hey, if you borrow this money, can you pay it back? And if this thing only gets $5,000 per year, which is only $500 per month, are they going to give me a $75,000 loan? Maybe. But the point is, $75,000 and I got to pay 4%, and I probably will get interest only. So don't get too crazy about that, but you'll get interest only. But then you're still going to owe the 75 later. But you could have interest only. But the point of the matter is, the bank's going to let you know, "I'm sorry, we're not going to give you $75,000. You don't make enough." That's all that's going to happen. So all this other crap about cap rates, DC, DSCR, and all that, the bank's going to tell you. And we'll get into the DSCR too. All right? So don't let anybody confuse you with this stuff. Here, I'm going to do it a different way. I'm going to put it in so you guys can see it. All right, so we'll get to the DSCR, because this is something else that he was talking about today. Banks do use it. All right, but again, it's no more, no less, is if you can afford the loan. That's what it's going to end up being. All right, so let me get this on the screen for you guys. I'm going to have to get a share up. I'm having a little difficulty today, but you know how we do this. This is SSN Nation. We're still going to make it work. It's not going to stop. All right. So look at this. This is debt service coverage ratio. All right. Now, let me explain everything in life when things start getting a little bit too easy, because when people now, ordinary citizens, understand real estate, they understand net operating income. They know how much money they have after expenses. They know that they need to see the rent rolls. They know they need to see the accounting and verify it, that the company signed off on it. They need all that. Everybody knows that. So now they come up with these new, well, I call DSCR. I call that new. It's nothing new. No bank is going to give you, we'll go back to the $100,000. No bank is going to give me a loan when I put down $25,000. And now I owe $75,000, and let's just say that property only gives me $3,000 a year in net operating income. No bank is going to give me a loan. Okay, it doesn't matter what my DSCR is. You know why? Because your DSCR is going to be based on, it's a 1 ratio. So it's the same thing. There's no way. So let's say, for instance, I owe $3,000 a month, and let's say that I owe the bank $3,000 a month. Let's say my net operating income is $3,000. That's a 1-to-1 ratio. No bank is going to give you a loan for that. That's common sense. But they're using all this other crap to make it seem like they need something when in fact it's nothing to be. It's not. No investor is going to do that. If you're an investor, you're not going to buy a property for $100,000, put down $20,000, $25,000, and break even. Who's going to do that? That's ridiculous. You're not going to go out and get a loan for that. So therefore, the DSCR is not going to matter because no bank's going to give you a loan, right? So I'm going to go into this just a little bit because people start talking about this now, and actually lenders for multifamily and commercial properties started using this DSCR. I call it nonsense, just so it scares people because you're not going to understand what it is. But you can see it's called debt service coverage ratio. Okay, this is also in Investopedia. And you can see right here, this is nothing, and see net operating income divided by total debt service. All right. Now, some people might say, okay, Eric, that's another calculation that I got to think about, right? It kind of seems interesting. Well, that's all it is. And then again, here goes another, we got to do all this kind of nonsense. This is why I'm trying to break this down so you guys can understand. They're just messing with you. All right. You have to understand as an investor what you're trying to do. You're trying to make money. So you are not gonna borrow $1 million. And then they tell you, oh, I'm sorry, Eric, you owe us, $35,000, $40,000 a year. You are not gonna go down there and then the $1 million property tells you, oh, you know what, we only make $50,000 a year profit. You're not going to go get a loan that you're going to have to pay 40 G's on. Who's going to do that? That's not even worth it. So let me give it to you right here. If the debt service coverage ratio is too close to 1, for example, 1.1, the entity is vulnerable. That's right. You're not going to have a 1-to-1 ratio. No investor would do that. That's ridiculous, right? So here goes a perfect example. Let's go to this. The property costs $2.15 million, right? They have the NOI. We'll use, this is the NOI, 2.15. Okay? The debt, where they have to pay $350,000 a year. Everybody and their grandma would be investing in this property. I don't really care. They're telling me the DSCR is 6.14. Who cares? If I have $2 million worth of profit, I believe I can go get a loan on a property if I'm making that and I am only going to pay $350,000 a year. Who doesn't think you can get a loan? Let me know in the comments if you don't think you can get a loan. Now, if this was net operating income, the profit is $2,150,000, and then I got a loan and some other debt service, and it comes up to $2 million. Who in their right mind would do that deal? You're not going to do that deal. So it doesn't matter what the DSCR is, right? You're not going to waste your time to break even or make $100,000, $200,000 less. You're not going to do it, all right? So that's all I wanted to point out from the get-go, so you guys don't get confused about all this new language, because I'm going to get into some of this language that they're using with loan and lenders right now, just trying to get you guys to be a little off, because you might be going, man, I don't know what they mean by DSCR. Oh, I don't know what they mean when they're talking to me about cap rates, which most people would know about cap rates. But all these type of things is what you used to do in school back in the day. They teach you enough in high school. Then when you get to college, all of a sudden they start using different verbiage. Then when you get in the real world, there's a whole nother verbiage, and they're sounding smarter than what you think they are. And you're thinking, oh man, I can't invest in this because I really don't know what they're talking about, this language they're telling me. So they're using language to scare you, is the way I look at it. This is craziness, all right? So that's why I had to break this out tonight, and especially listening to this clown. Man, I'm tired of listening to this nonsense from this Cardone guy, okay? He's sitting here talking all this crap that he's going, oh, I can do a 4% cap rate or 6% cap rate, I think he put on the screen, and then he's going to turn it into like 17% somehow. I'm like, what the? I was like, Man, please. All right? Please. This is why people who invested with him, who was supposed to get their 5 or 6%, you ain't getting 12%, are you? You ain't getting 10%, are you? You ain't even getting your 5% every month. Come on, man. Stop the nonsense. All right. So this is the real deal. So we're going to get into some other stuff. All right. So just be patient with me, because I don't like when people are sitting out here trying to confuse people, make it seem like they're doing something that nobody would be giving him a loan for. All right. It's nothing special. And you're not turning a 4 cap into a 17 cap overnight, next week, next month. Ain't going to happen. All right. So this nonsense that some people are spouting so you can invest with them, and then they tell you we're going to give you 5%. Come on. Does that make any sense? Everybody should have been like, okay, well, where's my 15% then? Where's my 16%? Where's my 10%? Where's my 12% then? You know what I'm saying? Come on now. All right, now let's get into it for the beginners. Hopefully that gets you guys helped out a little bit there. All right, so we're not done. We're not done, because a lot of people, you need some investments. You need a way. You found a property, or in fact, I'm going to skip what I was going to show you right here, because if you guys missed my last video, then you missed the part about LootNet. Okay? LootNet, CoStar. This is where you go find property. Okay? This is where you go find some property. This is CoStar. Now, it does cost to be a part of the CoStar network, but you can see here for lease, for sale, sale comps. This can give you analytics. So a lot of people who invest, they sign up with CoStar because you can find out properties here. Some people might say, hey, Eric, where else can I find properties? Well, go Google. Go find a commercial real estate agent. Tell them, hey, you know what? Send me everything that's I'll use the cap rate, right? Send me everything that has a 7% cap rate or a 10% cap rate, which is going to be unheard of in certain areas. But send me anything like that. Or you tell them, hey, I'm looking for a 4-unit apartment complex, and this is what I need. I need it to have a cash flow of, I need that 40, 50%, 40% cash flow, net operating income. That's what you need to tell them, right? So then they'll say, oh, okay. Then you got to give them parameters so they can go look for something for you. So anyhow, you can go online and you can do CoStar. All right. That's one place you can go. And in fact, since I'm in the ATL, that's why I guess it's probably showing me these REITs, right? So a lot of you are running around investing in these REITs and giving them money. And then the REITs go out and buy, like this, Office Properties Income Trust pays $195 million for the office building. All right. So that might have been a fund. I don't know anything about the Office Properties Income Trust, but again, they bought office buildings. So that's how they are able to get profits to their investors. All right. So that makes it a little bit easier. Now, I'm going to get back to, you saw CoStar, but again, my last video, I showed you guys could have went to LootNet. LootNet you can use for free. It's not the best, of course, but you can still use it for free. So LootNet, LoopNet, and you can see the choices: office, co-working, industrial, restaurant, flex, medical, land. So you're going to have all these different choices that you can pick on LootNet. So again, here's that Ghost Kitchens, which I find very, very interesting. I find that awesome. Now, so LootNet allows you to find your multifamily. So let's go. Let's see. We don't have. Here, I'll do it. I'll have to put this in. Let's go see if we can match it up. No, they don't like that, so we'll go with Flex. This is the ATL, which probably is going to have a lot of different properties in here. So let's see what the Flex goes is. But here we go. Business Park comes up straight off. Another business park. So most of these look like office. Well, no, that's something different. That's iconic. Built in 1915. They're selling that. That's interesting. 29 spaces available. So here you go, Whittier Milcom. So again, if you're interested in this type of properties, which looks like more like industrial, nothing looks like multifamily. So we're not looking for that. That's why I probably couldn't do it. I'm gonna go look this up. Hold on, something's not adding up. Where's my multifamily at? Here we go, multifamily. I was wrong. I was under lease instead of. So here we go. So this is in the ATL area. Now, here we go again. See the cap rate here? 4% cap rate. 1.7. So you guys can start doing the numbers, right? You can do 1.7 times 4, right? I think that's pretty easy. That's roughly saying that they have a net operating income of roughly 78, 80 grand on 1.7. You got to put down, let's call it 20 to make it simple, 340. We'll call it 400 just to make it easy. 400 grand, right? So 3-unit apartment complex, that's crazy. That's crazy right there. That's almost 500. That is $570,000 for each unit. You can buy houses for that. That's crazy. All right. So that will be sitting for a while, especially at a 4% cap rate. All right. So again, you have to understand what you're doing. Doesn't matter what somebody else is saying. Let's go with 20 units here. That's roughly what, 100,000 a unit? At least we're getting a little lower. I don't know what the cap rate is, but this is where you do your due diligence. As an investor, you're going to want to tell them, I need to know the NOI. I need the rent rolls. I need the paperwork that you file with the IRS that shows the profit that's signed off by a CPA. That's the first 3 things I need from you if you're selling this property. I don't want no hocus pocus. So therefore, if you're going to buy this property, you want your cap rate to be a lot higher, right? No doubt about it. All right. Let's see here. In case people are chatting, let me get back to the chat. All right. Let's see what we got. Thank you, Sam, Curtis Davis. So what would make deal work for $7K per year? Well, if your profit, if you have revenue of $7K per year, then you can go up to your I'll put it this way. I can only get a property that I'm going to be paying like $3,000. Well, that's $7K a year is only $650 a month. There's no deal I'd be doing. Let's put it that way. I'm thinking of $7K per month. There's no deal that you're going to be doing for $7K a year, unless the thing costs like 15 grand or something, 20 grand, but then you're not going to get a loan for 20 grand. All right. So I'm late. International Jocks, welcome to the Monday night live stream. Thank you so much for being here. I have a question. I'm trying to buy 12 unit for $750K and the bank wants $250K down, but I don't have the $250K. How do I come up with it? Okay. Why does you said that's a 12-unit apartment complex. Why do they need $250K down? International Jocks, please let me know. That's not normal. Hold on real quick. Let me do something. 750. Let me do some calculations here. I'm going to put 25%. Let's see. That's 187. Worst case scenario, 187.5. So first, I need to know why they need 250 because that's a third. That's 30%. So I guess it could be a myriad of things. All right. So we're going to, again, here's the first question. If you're going to buy 12 units for $750K, what's the NOI? That's the net operating. That's after expenses, how much profit is left. And what's the rent rolls? What's the revenue from the 12 units per year? Those are the things you need to know. And that'll basically tell you what you need to know. And I have a feeling that's why the bank is saying we want 30% down, because the numbers probably doesn't make sense from an investor standpoint is my only guess at this point. But maybe you'll give me some of the numbers. Like I said, let me know what your profit is per year. All right. And let me know what your revenue is every year. All right. That's what I need to know. What the rent rolls, how much you're receiving from the rent rolls every year. let us know, and then we can figure it out from there. But I have a feeling you're going to be awfully close to where the bank doesn't like it, so they're asking you to put down more money. All right, we'll find out shortly from International Jocks. So thanks for asking the question. A loan for a multifamily property, 4 more units, may be a balloon loan. That is correct. Interest only. Interest only. So I'm going to get into some of that, Victor Marrero. He's exactly right. So what will happen is, in fact, I'll get into it right now. I'm going to show you guys a screen that is actually loan rates from a random company I just picked out. All right, so let's see if I can get there. Let me see if I can share the screen. I don't know if I can because it's like a PDF, but we'll see in a second. It looks like I cannot. Oh, wait. Yes, I can. Looks like I can. All right. So check this out. Check this out, ladies and gentlemen, because this goes along with what he's saying. So you can pay interest only, right? Which is going to mean you're going to have a balloon payment in the end. And notice this is from June 28th. This is today. Small loan rates. All right. Loan to value. And look at what they have over here. DSCR. All right. Okay. So you're seeing this. So they're using this type of language so it confuses people, but you don't have to be confused about it. All right. You know it is debt service. All right. Coverage ratio. That's all it is. Debt service coverage ratio. But that doesn't really matter about that. They're going to use numbers. So this is loan to value is 80%. So you put down 20%, and they want the property to simply do 1.25 times. That's it. That's it. Basically almost like 25% more than your NOI. That's absurd to me. But they'll give you a loan for it nowadays. This is why property values are going up in commercial space and multifamily space. Because you can put down 20%, and I'll use the example again. I can put down, for my $1 million property, I can put down 20%. Oh, 800 grand. Right? And then all I got to do is make like, what, $105,000 or something a year. They're good. On that 800 grand, how much am I going to owe per year and interest only? I'm not going to figure that out right on the spot. But the point I'm going to make is, let me go see if I have a calculator here. Let's see something. 800 grand. All right. And I'm going to do a 30-year. Now, when you see that 530, it's amortized over 30 years, but you're going to owe and have to pay it off in 5. That's what the 530 means, all right? It's pretty simple. Now, I'm going to tell you what the 30 is. The 30 comes out to $4,006 a month, all right? That's monthly payments, but that includes interest and principal, okay? Interest only would change the number dramatically because the interest over 30 years would be 1.4 mil. So it would be almost an additional $642,000. All right. So then you can kind of start breaking it down into how much that would be per month after 60 months. Right. So you guys can start figuring out the interest only payments at that point. But what I'm trying to tell you, though, is if we had to buy this straight up, we would have to pay 4 times $50,000 a year. Right. So if we owed $50,000 a year, if we had a 30-year whatever, we'll just call it 50 a year, and we're making $80,000 in revenue, well, that meets our criteria, doesn't it? 1.25, 25% more than 50, right, is a quarter. So that's only 12.8, 62.5. So we would be able to get a loan with these guys. All right. See how simple this is? This is not rocket science. So hopefully you guys understand what I'm saying here. Let me get this on a bigger screen. All right. So I'll point it out again. See, this is the term. 5 years. You're going to owe the $800,000 back in 5 years, but they amortize it over 30. All right. Now, your interest rate is going to be 3.93 to 4.85. That's their discretion. You put more money down, like International Jocks, they're making him put more money down, all right, than the 25% or even the 20%. All right, they're making him put down like 30%. So he's more or less in this type category here, and his interest rate's going to be even a little bit lower because the more you put down, the lower your interest rate. And therefore, he could be in the same range, 3.58 to 4.35. And again, they're doing this 1.35 times your DSCR. Once again, this is not rocket science. All right? It's all up to you what you want to do. Because if somebody tells you, hey, Eric, here's $1 million, you have found $1 million property, and then you go in and say, wow, okay, this is kind of cool. You guys are making $100,000 a year in profit, net operating income. This is awesome. You put down 20% and owe 800 grand, and then you know that you're going to only pay interest only might be $60,000 for the year, right? So what are you going to do? That's $40,000 after you pay your loan mortgage. Are you going to take that? I'm taking it. That's $3,500 a month after all operating expenses, all in. I'm taking it, and I bet you the bank's going to give me a loan as well. So if you would have found out and said, hey, I know this property makes $100,000 a year, the bank's I'm going to have to pay $80,000 a year. Are you going to do it for $20,000 a year? Highly unlikely. Highly unlikely. Some people will. You know who those people are? It's people like Grant Cardone will. Okay? These fund guys. You know why? Because you're paying them money, and then they manage the property, and then they charge you a fee for managing the property. You follow what I'm saying? So, of course, they'll do stupid deals like this, but you won't. You shouldn't, okay? So just keep these things in mind. It's up to you as an investor what you want to do, and then the bank's going to help you out and go, hey, no, that's too close for us. We don't like, 80% of the profit as debt. We don't like that. Okay. Victor Marrero will probably have something to chime in on this about it. I'm pretty sure. So all I'm saying, as an investor, you don't act like a bank. You act like an investor. You act like the guy who says, I need to make X amount of dollars if I'm going to do this real estate deal. That's what you need to act like. The rest of the numbers will take care of itself. All right. But you need to understand when they're using these DSCRs and cap rates and things like that, that's just to confuse you a little bit. So then they're thinking, okay, is this a newbie or is this a guy that knows what I'm talking about? So this is how we may take advantage of the person. All right. And that's a Fannie Mae, by the way. All right. Here's the Freddie Mac, which is going to be a little less interest if you can get a Freddie Mac, because you can see here 2.71 to 3.9. That's a big difference. 2.67, 3.86. And if you do 55% down, you're at 2.5. You can get almost a 3% note or under, right? So that's if I'm getmultifi.com. Okay, I'll just give them some plug, even though I don't really have any business to do with them. All right. Well, hopefully you guys understand what I'm saying, but this is Real Estate 101, real estate for beginners. All right. Everybody has to understand. You have to know how much the property is making after expenses is paramount. All right. And then you realize, are you buying it at the right price? Because it goes hand in hand. All right. You can't buy something like, I can't buy a $2 million property and it's only bringing me in $50,000 a year. That's not going to work. All right. Unless you're buying it for cash, but to get your money, $2 million back, is going to take you 40 years, right? 20 times 50 is a mil. Yeah, so that's 20 years. So that take 40 years. Who wants to be in that ball game? You don't want to wait 40 years to get your money back when you make an investment, right? All right. Okay, ladies and gentlemen. If you have any questions, let me know. But I'm waiting to hear back from International Jocks. So the note 700, the rent must be 1,000. Yeah, exactly. It's something along those lines. Minimum. And some lenders probably still won't give it to you. They'll just make you put down more money. but that's going to be pretty close. Your screen froze. Oh, man. All right. Well, we're back, Victor Morel. Thank you very much, because I see I got full 100% internet now. Jewel 20 lady with the icon next to her name. Thank you so much for being here. Hello, SSN family. Who here does wholesaling? KM. Right on. KM, welcome to the Money Making Mondays SSN Live. I appreciate it. Who here does wholesaling? Personally, I don't do wholesaling. There may be somebody here that does wholesaling, but if you have any questions, let me know. All right? We have people that can help you out here. Good evening, Mr. Burden, SSN fan from Wilson Koo with the icon next to his name. Thank you so much for being here once again on a Monday night live stream. 1.6, 80K to 50K, right. I just used that as an example. Yeah, I wouldn't do that. Right. Yeah, exactly, Curtis Davis. It is 1.6. Exactly. So it will fall in the parameters if that's the number. But as a real estate investor, will you do that deal for a property that's costing you like $1 million? That's the question. That's the $1 million question, right? I'm buying a property with a 5% cap rate, which in theory, I'm only going to get 50K. So then I'm thinking, okay, I'll just raise the rents, and then maybe I'll make it 80K a year, but you're going to really buy a $1 million property to make 30K a year? I mean, that's kind of crazy, in my opinion, right? How many years is it going to take me to get that 800K? So that's the way I look at as far as real estate investing goes. That's the way you should look at it. If you're an investor, you're going to look at the numbers and you're going to determine, should I even bother? Is this even worth my time? We could where banks can't. Right. Exactly. You need to see the statements from business and banks, as we always ask for those if you are investing. Exactly. Exactly. Wilson Koo, most banks, most lenders will ask for bank statements for a few months, but things are changing down here in America. You know why? Because whenever there's a downturn in the economy, they always open up the real estate floodgates. So right now, I'm going to show you guys something that is just remarkable. Because I mentioned the loan guys. Let me go find these guys. The loan guys. You guys, this is the start of how the crash happened. All right. So I'm going to show you this here. Watch what comes up on the screen. This is what's happening in America. No income verification, down payment 20%, interest rates 4.9, 30-year fully amortized. That's what it means, 30-year. Single family, 2 to 4 units, condos, and townhomes. Guess what else? They don't even need 3 months or 4 months bank statements. Yeah, I talked to the guys just to see what this was. They don't even need 3 or 4 months worth of bank statements. They just need the bank statement of right now just to show you have the 20% down. Proof of funds. That's all they need is your bank statement as of right now. That's it. So as long as the bank statement right now shows 20% down, you're pretty much good, and your FICO score only needs to be 650. So that is a low bar all the way around. No income verifications, 650 credit score, and no docs, no bank statements, nothing other than proof of funds in your bank account. That's the bank statement they need, just showing you have the 20% money sitting there. That's it. Loan guys. I mean, it's crazy what's about to happen. And this is multifamily, by the way. This isn't just single family homes. This is multifamily. They actually do, this says 2 to 4 units. They do 5 plus, and even though they're in California, they do every state except for South Dakota and North Dakota. All right? Look at this. Hard money construction loans. They do some other things, but I didn't talk to them about this. All right? But just for the multifamily, they will do 80% LTV, by the way. All right? And just like any other lender, if there's a problem with that, then they can say, okay, instead of giving us 20% down, we want 30% down. All right. Or it goes up from there. So anybody, if you can find a deal, the bottom line is you need to make sure that it's cash flowing. All right. That's right. Banks, like he was saying. Let me see. Oh, here's the screen that I was looking for. This is the screen I was looking for. Here it is right here, ladies and gentlemen. 75% LTV, 2-year maximum term, 650 minimum credit, 1 to 4 family real estate condos, townhomes, 5+ unit apartments, mixed use properties, up to 75% LTV, 25% down. So by the way, international jocks, this could get you in right here. Now, what he asked about was, where's he going to get that 250? And international jocks, what I'm trying to tell you is where you're going to get that 250 from is going to depend on what that net operating income is for that property. So hopefully you're still here. So international jocks, we need to know what that net operating income is, the profit every year on that $750,000 property. That's going to determine how we can proceed with this. I'll give you some examples in case people don't understand. Here's what's going to happen. So let's just say we're not going to use the loan guys. All right. Because you don't have the 250. So now you're going to have to get an investor in here. Right. So an investor, a hard money guy, might want his 14% per year. He's only going to give you like a year and a half at 14%, right? It could be interest only too. But the point I'm trying to make is they're going to want some money and they're going to charge you for it. All right. So we'll use that 250, 12%. What are we at? 250. So we're going to be at 30,000. Right. So you might owe these guys $2,500 a month. All right. Okay. $2,500 a month, interest only for a year. Now, that's just the interest. They might want some of that skin in the game too. You might say, okay, I'll give you 25 plus another 1,000 or something. So therefore, that's $3,500 a month. Let's call it, because you're nobody. They don't know you. You're trying to make the deal. Let's call it that. So now you know you're at what, 40,000 a year. So does the $750,000 property bring us more than 40,000 a year? That's the question, right? What do you think, Marrero? Let me know. I'm waiting for International Josh to give us an answer, because that's how we're going to determine, because you will be able to get people that'll finance it for you. They'll put down what was that, 250? They'll give you the 250, but you're going to have to give up, some G's, 3,500 maybe. But it'll be easy if that $750K property generates like 80 grand a year. That'd be sweet. 100 grand a year, even better. You'll be able to get investors. In fact, you can hit me up, because we can get you investors for that. All right. That wouldn't be a problem. All right. Need the paperwork to see if value is real. Yeah, that's true. You're going to need some paperwork. That is true. Sounds good, but 20K down only? No, 20% actually, Curtis Davis. All right. This works for investment properties as well. Yes, that's right. Exactly, KM. Wholesaling is the same thing. In case people don't understand what wholesaling is, anybody can do that as well. Let's just say if you're an investor in real estate, you're driving down the street, every house that has a yard with weeds in it, hasn't been mowed, that's a target house. All right. You got to find out what's going on. You got to start scouring about if you're going to be a real estate investor or wholesaler. Bottom line is, you're driving around, you find a place that has weeds growing up and it seems like nobody's taking care of it. You go find out what's happening. The property might be sitting there for 5-6 months. You don't know. The owner of the place is like, you know what, I don't really know what I'm doing. I'd rather just get rid of it. He's willing to sell it under market value. and you'll be able to buy it under market value because maybe it's not proper fixed up right or whatever. So he's willing to listen to you. It's free and clear, or he only owes like 10 to 20% of the value of the house. So a wholesaling, I'll use a $200,000 house this time, except this, you roll around the neighborhood and all the homes in the neighborhood are 200 grand and up. You roll around and you see this house that looks like there maybe a rehab might be needed or something's just a little off. You find out, you talk to the guy and you say, hey, will you buy, I'll buy this from you for 150. And the guy's like, oh, 150? I think I'll take that 150. So you sign a contract and then you say, or can assign to. And when you sign the contract, and so then you go to Facebook, you go to the real estate group in your city, you go try to find another person and say to them, yeah, the houses in this neighborhood are 200 grand to 250. This guy can pick it up for 150. Why don't you just give me 170? 20 grand without actually holding on to the property. Now, I might have to put down $500 to $1,000, which is what I always request when somebody always tries to buy property from me. I'm like, you got to give me some cash, man. Put it in there. Because if you don't make this happen, you're going to have to give me that cash. So anyhow, the point I'm trying to make is, so now you have an opportunity. You have a property at 150. You know it could sell for anywhere from 200 to 250. It was, brought up to specs. So now you go around town and you could tell somebody, I'll sell it to you for 160. And you made a quick $10,000. That's wholesaling. All right. And a lot of places like in the South, where I'm in Atlanta right now, this is doable because they have a lot of homes that are 50 years old, a lot of homes that are 40 years old, a lot of homes that are 60 years old. And they're in mature neighborhoods. But as you know, with any big city where there's an influx of people, housing prices start creeping up. So if you can rehab the property or you can flip it to a real estate investor because they realize, oh, if I put in $10,000 or $15,000, I will be able to get that 230. So of course I'll buy it at 180. You see what I'm saying? Now, if a wholesaler gets to make 20 grand real quick, 30 grand if we're 150, sell it for 180. If you're lucky enough to do that, that's 30 grand for something you don't even own, don't even hold. So that's wholesaling is a good thing. As long as you can find the low price deals. That's how you do it. All right. KM, he's got questions. It looks like nobody does the wholesaling here, but I know what you're talking about. If you have any questions, let me know. Leah Dennis with the icon next to your name. Thank you so much for being here on the Monday Night Live. Hello, SSN fam. I'm just checking in, looking forward to another great night. Thank you so much. I know people that do that, but they will partner with you. That's right, Wilson Koo. That's correct. That's correct. That's what I'm saying. They're going to want a little bit of equity, or they'll want a sooner payout. There's all kind of options that can happen because it's up to you as the individual. You're sitting there saying, I'll use this International Jocks. I'll need 250K. And the fact that you need the 250K, they get to dictate the terms to you. They can sit there and say, okay, I want 14% per year. If I'm going to give you 250K and I want 10% ownership or whatever they want to do. They dictate the terms, and that's what you have to negotiate. Is just the 14% for a year good enough for you? Or if they wanted, some extra equity, are you willing to give that up to make this deal happen? And of course, it's all going to be based on what the net operating income is. Can you live with giving these people their money? And do you have enough? You don't want to make yourself short in case there is a COVID situation where all of a sudden your rents drop. See, anything can happen. It's an investment. All right, let's see what we got. Is this a good deal? A 5-plex for $435K, each unit renting for $675. Ooh, owner pays water. I don't like that. I have put down $45K. That's 10%. IBE, you got to give us some more information. What kind of deal is this? Because normally in commercial real estate, even a 5-plex, you got to put down 9. You would have to put down at least 90. So is the owner carrying something back, or what's the deal? Because you're going to have to let us know. Even the 675 times 5. All right, this is real time. So let me I got to do a calculator, even though I can probably figure it out. But let's just do it this way: 675 times 5. That's $3,300. Okay, 3375. Now, let me put it to you another way. You're gonna buy this place. You about that? Okay. Looks like I lost you guys. Yeah, it looks like we're having a bad stream tonight, but I'm hanging in there. Hopefully, you hang in there too. But if you can hear me, um, you gotta have to. Okay, I'll get into what I immediately would do. I need to know what the revenue. I know the revenue is 3375. All right, per month, which means we're at about 40K. That means we're only going to end up with 20K roughly, and with this owner paying the water, uh, that's not good. So hopefully they have separate meters for the water, so the tenants pay the water bill. All right, so that'll give you more profit, by the way. But okay, so at this price point, again, we need to see the NOI on this. And why are you considering buying that IBE? Anyhow, because that's I can see where you would buy it. I mean, it's 40,000, roughly 3375. We're call it 39 grand. We have 39 grand total revenue, and now after that, we probably only have 20 because generally you take the rule of 50% expenses. All right, so that's where I'm coming up with this 20. And if all we have left is 20, now I have to service my debt. And how much is my debt going to be if you're putting down 45, which I don't know how that's possible unless he's carrying it back. But if you put down 45, you owe 390. Even if somebody gave you like interest only, I'm not quite understanding how this works out. So maybe you can enlighten us on some other numbers. All right. Let us know what the NOI is. That's net operating income. That's after you have paid your expenses. Out of that 3375, how much money's left over? All right. And that could only be like 1,500 a month. So therefore it depends. And let us know what state this is in as well. Closing costs. Edward T. Fagbimi, he's asking about closing costs. If you're referring to the loan guys, there's always going to be fees for that. Closing costs, well, you guys can always figure that out between buyer and seller. It's up to you. All right. Here we go. Let me see where we're at on the screen. Victor Marrero. My approach would be to put down as much money down as I can. If you have properties, use their equity. That's true. I have my Georgia property standing by. Exactly. He's and Victor Marrero's a further along the line of real estate investors because it makes it a lot easier if you already have property. And like he said, you would have equity in the property, so you would be able to borrow that money for your down payments. So it makes things a lot easier. But yeah, I like that approach. Put more money down, right? Because then you would have that would reduce your expense. That's the best way to go, quite frankly, if you can do it. That's always the best way. All right, cash talks, BS walks. hey, Wilson Koo. Hey, let me tell you something. I don't advocate buying properties for cash. I never advocate that, quite frankly. So but you're right about the cash talks because if you can't prove you have the down payment for these multifamily or real estate investment commercial properties, then that's right. BS is going to walk because they're not going to look at you. Silverman Fox, hello from New Jersey. Thank you so much for being here, and especially with the icon next to your name on the Money Making Mondays SSN Nation Live. Thank you so much. How can I connect with you, boss? KM, thank you. You can always, anybody can send me an email at eric@stopstrugglingnow.com. Support at stopstrugglingnow.com. Eric at stopstrugglingnow.com. Send me an email, Roof Zone. We don't charge around here. We try to help people. Why? Because we make money. Wholesaling people in Canada, but you need to put something concrete and get cash on signing. That's what Dean Graziosi made money on. Yeah, it depends on your market. Canada's a whole nother ball game, because literally in Canada you can flip houses because home prices it escalate so fast. It's like 2005, 6, 7 all over again. This is basically what we're doing with pre-construction property right now, Wilson Coop. Like I said, the only person here who's ahead of us on the pre-construction is Victor Marrero. So again, I'll use it every live stream when this comes up. He bought his property 231 in 2018. He's now lucky enough to have it. The property is 329,000 to 349,000. So clearly he's going to have equity in his property, and it's going to be worth more when they finish it next year. So it's probably going to be worth 400 at the least, I would think, by next year. So he's already going to have like 100, let's call it 160, 170 in equity, and he can unlock that. So in the case of Canada, which, price escalates so fast, somebody could buy property. You're going to have sellers asking for exactly that. I want cash, I want signing, I want everything, because they don't want to miss out. They don't want some Yahoo playing around with them when they could have sold to somebody else all cash in 14 days, all cash in 30 days. They don't want to mess around. So they're going to require, hey, give me 5,000, 20,000 down. I don't really care. They start doing different things depending on the market. Yeah, Dean Graziosi. Yeah, he's another guy. Seminars, books, all this kind of stuff. He goes around the country. He's been going with Robbins. Tony Robbins? He's been going around with him lately. But yeah, he's been in real estate a long time. Like 20, at least 25, 30 years when he was a kid. All right. So yeah, he's been dabbling in it. I mean, doing the damn thing. All right. So no surprise there. Saw a beautiful multifamily property on your recommended site, LootNet, at the 34747 zip. We'll need to see the revenue. Exactly, Victor Marrero. Exactly. In fact, well, I won't go. I won't pull it up. All right. We'll let you do the thing. But yeah, that's it exactly. That's what number one is always. Need to see the revenue, and then I need to see the net operating income. And the reason why you want to look at the revenue and the NOI is because as an investor, you might be sitting there going, you might see something. You might like I'll use a perfect example. When IBE was talking about this right here. Let me give you a perfect example. So IBE finds out it's $675 rent, and he finds out owner pays for the water. And he finds out that other 3, 4, 5, 10-plex properties in the neighborhood, the same type of unit is renting for $750 a month, right? So now he starts thinking in his head, wait a minute, I shaved this water payment off. I can raise the rent up to $750 to equal, but I'm not going to do that. I'm going to raise the rent up to $700. And now you just increased, even though it's only $25 per unit, which is only 125 times, 25 times 5 is 125. But you have just increased the value of your property. All right, just by doing that. Plus now you saved off the water bill. You made more money all the way around. So instead of the 125, who knows how much the water bill is? Let's say the water bill is $50 a month per person. And now you done shave that off. So now you're making $50 times 5, $250. So now you're at $375 per month that you're making now. That changes your whole equation, because now instead of $3,375, now you're making $3,700. Now you're over $40,000 a year, right? That changes your numbers, because now is your property worth $435 at that? No, because now if you go to the bank and tell them I'm collecting instead of $3,375, I'm collecting $3,700, And now instead of me only having this little, what did we come up with? 33, so 12, 15, let's call it $1,500 a month. I'm now closer to $2,000 a month, right? In fact, I am over $2,000 per month. Your property is increased in value, so now it's going to be worth more. But that's on the backside. Now we're going to do our equity. Now we have a little more equity, and now we can keep rolling it up. Now next year, because we know it's $750 in the neighborhood, inflation is rising. Now next year it's $725 a month to rent at this location, right? And just in a matter of 2 years, your $435,000 property could be worth almost getting closer to 500. You can cash out your partners, right? So just think about it. But anyhow, I was hoping that International Jocks would come back so we can talk about that, because that would be real world stuff. And let me know if you want me to go look that property up, Marrero, and we can talk about it. Otherwise, if not, it's fine. 657 is about 40. That's right. It's $33.75 a month. So you're almost at 40K. Exactly. And you can probably figure it out, Wilson Koo, because I still haven't figured out why he only has to put 10% down, or if he was putting 45K down and he still has to put on another 45K. But I don't know, are we going to do that deal when we know we got that's 90, 435. So we're at 345. So we have a loan of 345. You see what I'm saying? So I don't know if that's going to work. Okay. Do you provide assistance with helping someone obtain a multifamily property as a first-time home buyer or the resource? Ish Ana Yafi, thank you so much for being here on the Monday Night Live stream. Okay. If you missed the stream earlier, I don't know what you mean by obtain, but I can tell you can go to LoopNet, LOPNET.com, and go look for multifamily properties in your city, because you can look by zip code and you can look by city. All right. So that's one of the first places you go. And I like what you're saying here. Multifamily property as a first-time home buyer. I love that, because that is your first move. Because your multifamily property should bring in profits, stream of income, and you use that stream of income to pay for where you actually live. So I do like that move. And what you can do is if your credit score is 640 and higher, you can get an FHA loan, put down 3.5, 4%. I always say 4%, but you can put down 3.5%, 4% down. You have to win one of the units, but it can only be up to a 4-unit apartment complex. All right. I also mentioned Loan Guys, which is loanguys.com, who are doing multifamily properties where you can put down, you're going to have to put down 25%. All right. But the FHA up to 4 units is the easiest one of the easier ones, because you don't have to put down 25% or 20% or 30%. So that's one of the easier ones to start with. And LoopNet is where you would go to make it easy for everybody. And I also mentioned you should contact a commercial real estate broker. Okay? They have listings. They have their ear to the ground, and sometimes they find gems. All right? So hopefully that helps you out. Ishana Yafa. Okay? Thank you so much for asking the question, because that helps out a lot of other people. All right, we can hear you. Thank you so much, Tanisha Lyles. Miss Price is right. It's in the house. Not good. Change something. Doesn't add up. Yeah, exactly. That's the way I look at it too. Anyone needing assistance for first-time home buyers looking to Bank of America grant, they cover up to $17,000 in down payment and closing costs. This is very true. That's very true. Thank you for mentioning that, KM. And quite frankly, there's a few other banks that also help with first-time buyers assistance. As far as multi-family goes, kind of things, but that could work out for a lot of people. We do deals in US too. Oh, okay, Wilson Koo, I like to hear that. Sure, you can pull up the property. It's Kissimmee. Filter for multi. Oh, 34747 is in Kissimmee. Okay. Let's do it, ladies and gentlemen. Looks like we're getting a treat today. Looks like we get this is going to be a treat. All right. This is a treat. You're getting firsthand how you're going to look it up, right? No BS. But again, we're not going to be privy to the numbers unless they put it in. Well, I guess hold on. 34747. And is it multifamily? I'm assuming it is. So we'll do multifamily 34747. Here we go, ladies and gentlemen. Just like Marrero did. He went to his 34747 on LootNet, look up some property. Is it any one of these? Because this is within 10 miles. So let me know if it's one of those. Let's do it. Yeah, that's it. That's how we do it here. This is within 10 miles. So I don't know if it's one of these. Happy Mag, Orlando Lake, Berkeley Resort. Okay, that's interesting. Residential. And here we go with this 6.41% cap rate. They want 1.2 million. It depends on where this is, but hopefully, let me go see if we'll get out the 10. We'll get out of this range. We'll get out of this range here. Let's just go to let's expand our area. All right. Let's see here. They got me back in Georgia now. All right. Let's go look. Hey, this is all I see here. This doesn't make sense. Marrero, let me know if it's one of these. I don't see how this makes any sense right here. Oh, there he is. He's saying it's 44616 Summer Flowers. Okay, here we are, ladies and gentlemen. Here we are. Okay, we got a 6.41. So what is that? That's 78, 80. Well, we can already tell it's doing 80,000. How close was I on that when I said 1,080,000? That's pretty close. So again, here we go, ladies and gentlemen. Let's go look through this. So it's talking about, it looks like it makes, well, okay, hold on. Let me do the real numbers so you guys can see this, right? So all we got to do is do 1.2 million times 6.41%. Okay, so they're only telling me that this thing has a profit of $76,000 a year. So you guys see, I wasn't that far off when I was talking about that $1 million property and profit-wise doing about 80 grand. You can see how close it was, actually. It's not that far off. But here we are. We're at 1.2, and it's only a 4-unit part. Well, see, I shouldn't say it's only a 4-unit. We need to know how big these units are, right? So here we are. Oh, this is brand new, ladies and gentlemen. Brand new to be built upon contract. Okay. Completed September 2021. Bulk sale, 4 or 8 unit luxury townhomes with 2 different 4-bedroom floor plans. Oh my. This looks like you can change it up to, instead of 4 bedrooms, you can split those and make them 8. You can turn this into 8 units, which means that could be more valuable, but then you would have to know your market and where this is located, right? So location matters. Amenities are going to matter. They're 1975 to 2,000 square feet. I like it. Fully equipped kitchen, appliances, spacious living area, 9-foot ceilings. I like it. I love anything above 8 feet. All right. Fully tiled throughout. Oh, this is going to be set. Available for long-term or vacation rentals. Private front yards, expansive recreation area with pool. There we go with the amenities. Volleyball amenities, playground amenities, and walking path amenities. Close to Disney is another thing, and all major attractions. This isn't a perfect location, it sounds like, but they're calling this a building class B. So you know building class matters. A is the best, B is next, C is better, D, don't bother, and anything below C, don't bother, because that's usually bad neighborhoods. All right? But this is under construction, 6.1, build to suit. So you get to put in your own deal. So now the question is, how much can we rent these for? right? That's the real question. If we leave them as a 4-bedroom, or if we slice these into 2 bedrooms and we do 8 units, is it worth it to keep the 8 units or make 8 units out of it, or does it worth it to make 4 units? Marrero already has Margaritaville and he's familiar with the area. So he would know what he would be able to get for this in this area, which is what you have to figure out if you're an investor, right? So we have the air conditioning, the heating, the range, and this is new construction. You got to love this. Got to love this. I like this. Oh, we have an HOA. Here we go. They even put in some info for us, ladies and gentlemen. They're saying average rent is $2,000 per month. Oh, they're giving us a pro forma. That's what we used to call these things, pro formas, because there is no rental income coming in yet. So they're guessing based on the area. Now, you have to do your own due diligence, right? You can't go over here. Oh, let me take this off because you guys might not. Wait, what happened? Okay, this didn't. Oh, I see what happened. You guys didn't see what I see. Okay, hold on a second. Let me get this up for you because it went to another page, so you guys didn't see what I was talking about this whole time. All right, here's the 4-unit apartment complex. Very nice. All right, it's being in construction right now. There's amenity number 1, the pool. Here goes. These are renderings. Apparently, this isn't built yet. It might be. It says September, so it's only a few months away. Again, you can see the renderings here. Very nice. Very nice. Right? Very nice. Brand new block construction. I went over that. That's where I got it from. Here's where I got the square footage, and this is where I got the sale 4 or 8 unit luxury townhomes. This is where I got they put it in there for us. This is where I got the building class B. That's in there for us. Build to suit. So you can now, if you're going to buy this, go in and do any type of changes you want to do right now, which is beautiful. And of course, pool, volleyball court, walking trail. Now, they have attachments here, but this is where I came up with, they were putting in 4 units at $2,000 rent per month. That's what they're claiming. Victor Marrero already rents a place, Margaritaville. He's going to know right off the bat, if he rents this under Airbnb format, he can probably get more than $2,000 per month. That's why he's interested in this, ladies and gentlemen, because the numbers that they have right now, it almost makes it like impossible if I'm going to do 4 units and only make like 40 grand or 50 grand. That's not going to work out at 1.2 mil. I can tell you that right now. So here's what they're doing. The pro forma is what I'm talking about. Financial summary, actual till 2021. This is all going to be a guess based on the area, but you guys have to do your own due diligence. All right. So they're saying $96,000 is going to be the gross. They're claiming taxes is only going to be $9,600, and I don't know if he's right about that, or they are. Operating expenses $8,640. I don't know if they're going to be right about that either, because we have HOAs here, so I don't know what the HOA is going to be, but well, in Florida, actually that could be HOAs for the year for 4 units. That wouldn't surprise me. Total expenses $18,000. Now, this is where you have to do your due diligence from a real estate investor standpoint. Like Marrero just said, I'm not buying this operating expenses stuff. I need to know where you're getting these numbers. So I need to know how much the HOA is. I need to verify the taxes. All right. And there's going to be other expenses, maintenance. I mean, who's going to cut the yard unless the HOA is cutting the yard for me? Now that's got to be in our equation. I'm going to have to figure out a few other things that we're going to have to, if we're going to rent this out, let's say vacation rentals, not month to month. I might have expenses such as management fees. So once again, and wear and tear and a few other things are going to come into play. So they're giving me the best case scenario of $77,000. All right. Now I see a huge problem straight off the bat because they are selling this for 1.2 mil. 1.2 mil, and all I'm going to come with net is 77 grand. I'm going to have to put down, Marrero, tell me what I got to put down. At least we got to put down 25%. You guys can't see what I'm doing in the background, but I'm doing the 25%. We got to put down 300K, right? And that's how much they're charging per unit. We got to put down 300K for this. So we're going to owe 900. I'm not seeing how this works out for me at their this equation here that they're giving. I don't like that equation. So what we're gonna do, Marrero, we're gonna do vacation rentals, right? Like Margaritaville. That's what we're gonna do because I need more than $77,000 a year if I'm gonna pull the trigger on this deal. Option 2, it could be rented for $813 a unit with the owner paying for water and electricity. I would not do that. He suggested I put down $45K and use a hard money lender, borrow the rest of the month. IBE, who are you putting down the $45K to? Because it sounds like you're going to give it to the owner, and he's not going to give you anything for it. I'm not following. So you're going to have to explain that one. We're going to get back to that in a second. All right. IBE. Let's see. I wouldn't do that. The reason why I would never pay for water and electricity is because when people don't have to pay for it themselves, they run it up. And you don't want to have that fluctuation. Is all I'm saying. I would rather take less money and have the tenants pay for their own water and electricity. Because at least I know every month how much money I have coming in. Whenever you have to pay for water and electricity, you can rent it out for $813. Okay? That's up from $675. But let me ask you something. What happens when it's winter or summer and the bill doubles? So in other words, you have 4 tenants and all of a sudden they're paying $125 each per month for electricity, and then the water bill, I don't know what it could be, $50 or $60 a month. And now all of a sudden, you might as well have just charged them $675 because that $150 more won't matter when it's a negative 200 or a negative 175. Now you're not even getting the 675. So I would never sign on as an investor to have people paying the renters or the tenants water and electricity. That's a no-go zone for me. I better have meters. I need separate meters for each unit. And if I don't have separate meters for each unit in this case, I'm not buying the place. I have to get a better deal than $435. Let's put it that way. And let me know about this $45K down and then getting a hard money lender, because you should be giving your hard money lender the money down, in my opinion. If he's trying to say give him 45 and then now you're going to do, I don't know why you would do that, because the hard money lender's still going to say, okay, where's my 20%? All right. Or he's trying to tell you to get an investor, but I don't know too many investors that's going to come off of 300 and some odd grand. I don't know who's going to do that. 390,000 just so they can get, 50 part of $1,000 a month. I mean, I don't see how that's going to work. So you can give an investor, let's say best case scenario, 18,000 a year. I don't see it. I don't see it. In fact, you're going to owe if somebody has to give you 300, let's say 390,000, hard money lender is going to be like in double digits. They're going to want like 13%. So you can start doing the numbers. All right. So you don't make enough at that price point. You don't make enough. Let me see what option 3 is. All right. You are as good as the carny guessing age. Can you do short-term rentals, you think? Yeah, Victor Marrero. Yeah, that's my whole question right there. Because at 1.2 mil, oh, okay, let's go another route. I'm going to do something else. We got to go look and see where this is, right? Let's see where this is. This is how you do it, ladies and gentlemen. This isn't for the faint at heart, right? Oh, hold on. We're in, here it is right here. It's on, okay, what is this? This is on, isn't this the street? True. Oh, okay. This is probably the lot. That's what that is. Okay. We need the address though. Where's the maps? Here's what we need, ladies and gentlemen. This is what we need. Here we go. Where are we? It's not on my map. Come on now. Where is it at, ladies and gentlemen? Oh, here we go. All right. This is good. This is good. This gives you an idea of the area. And I just lost it. Hold on a second. Where was it? I just lost the place. Oh, here we go. All right. Oh, wow. It doesn't. Okay. La Rev, Orlando. Let's go if that's a marker. Okay. I don't know where it is, ladies and gentlemen. This is unusual. All right. Oh, here's La Rev right here. Okay. So it is in this neighborhood here. Now, let's see how far back out we can go. We're by a Walmart Supercenter. That's a good thing. We are in, is this the old section or new section? Oh, this is older section. Theme parks are up here. Okay, so just for everybody that's not familiar with Orlando, all the hotels used to be here along this corridor. This used to be all hotels for people to stay and go to Disney. All right. So Disney's over here. I'll scroll over. Here's Disney. So this is on the way. This is okay. This is all right. It's not exactly in the prime location, but it's better than being in other areas of Orlando. At least you can get to Disney. You can also go up John Young Parkway, and that gets you up to SeaWorld area. So you can get around being at this 192 area. So that's good. Walmart's up the street. That's good. Everything is good. I like this location so far. Now it just matters on how much can we rent in that location. That's what matters, right? That's what's going to matter. And so what are we going to do? We're going to do something else. Would like to likening this complex. Yep, live in this complex. Yeah, that would be interesting. $2,000 a month would be cheap. Anything close to Disney, you're making over $15K per month for 4 units easy. I'm getting $6K to $8K for my property. It's just 1 unit. Yeah, exactly. So therein lies the whole thing, ladies and gentlemen. He just said it. I knew he would know the numbers. So that's why this is very, very good for him. Or for that matter, I have to say it now since we can see what it is. But for any investor, right? This is what you want right here. And again, we've done the numbers. He's done the numbers already, right? So I'm going to go back to the LoopNet listing. So you guys, this was awesome right here. Let's put it in perspective. All right. So here's the thing. Marrero, do you consider this close to Disney, even though it's out by 192 in the older section? It used to be older section. Now they're rebuilding over there. But there's the magic numbers, ladies and gentlemen. Instead of only making $2,000 a month per unit, which means $8,000 a month, which is what they were using for this. Remember what they were using? You guys remember what they were using as the numbers? Let me see if I can go pull it back up for you. I can't. Oh, yeah, I can. Okay, we're back. Yeah, here's the numbers. Right here, they were using $2,000 a month. So they were saying $8,000 a month, which gives them the 96,000. Marrero is saying he could be getting, let's just change this number from 8,000 and change it into 12. All right? We won't go the 15 like he says. We'll change it to 12 on the rental program. That changes the whole value of this property, not for the person that's selling it, but for the person that's buying it. So Marrero has every reason to look at this and go, wait a minute, it's not 96,000 gross. It's 144,000 a year gross. That changes the numbers dramatically. Now, loan to value, ladies and gentlemen. Now, we're still going to have to deal with this 25% down, right? Okay, that 300,000. We're still going to have to deal with that. But the fact of the matter is, you just changed everything. So if you were able to get another, what is that, $50,000, this 77 turns into 125. That changes everything. And by the way, the property will be worth more than 1.2, ladies and gentlemen. And your cap rate of 6.41 just got changed. You just doubled it. All right? You just doubled it, ladies and gentlemen. At 12,000. If Marrero is correct where he can get 15,000, well then that changes everything. Now you're making 180,000 at gross. That's double this number. Double the number, which now means his liability. And if he's able to turn that into 150, then this is a deal. I mean, it was a deal already. What I'm trying to say, it's a deal already because he's going to do vacation rentals. You can make more than $2,000 per unit from vacation rentals, especially these sizes. Even if he kept it 4 units and he keeps it at they had a map down there. I didn't have to look. Even if he kept it at the 4 units, these are big units, 2,000 square feet. All right. Even if he kept it at that, and he can turn that into $4,000 per month instead of the 2,000, he's already winning. All right. He just doubled everything. That also means this property is not worth 1.2. It's going to be closer to $2 million. Now he has instant equity after about 6 months when he goes back to the bank and goes, hey, look, I'm making $4,000 per unit. I'm making $16,000 per month on this. And they're going to go, really? Okay, your property's worth $2 million. He can now go, hey, I want $200,000 against this and go buy another investment property. Or take back the $300,000 that he had to put down, and now he has that back and go invest in another property. See how we do this, ladies and gentlemen? I like it. I think it's a hell of a deal. If they allow short term, like they say, I am telling you, you will blow up. Exactly. He's already said it, ladies and gentlemen. My assessment, this short assessment that we did, you guys can see how this works. Who doesn't think this is a deal? Let me know. Who doesn't think this is a deal? Because right now I can tell you this is a deal. The only thing we don't know is when they're doing their expenses here, we don't know if that includes the HOA. That's the only thing. And it was my bad. They actually had this. Well, this isn't that close to 192. That's interesting. It's a little further away. 31-minute drive to Orlando Airport. Well, what isn't around there? Yeah, if anybody has any questions, this looks like a winner. I'm going to try and do something else, which is going to take me to another page. But he's got it. And the last thing is that you guys have to deal with this property is what he's saying as well. Being that we're vacation renters, we have to know if we're allowed to do vacation rentals. And we also need to know if there's more. What is this, a type of a subdivision or gated or whatever else is needed to know. But we need to know if this is allowed, like he said. Because I didn't see on their docs anywhere that they said that you can have vacation rentals. I'm assuming you can, because why would you not allow that in this day and age, especially when you're making 2,000 square foot units? Here we go. Long-term rentals. Oh, I missed it. Or Airbnb vacations are allowed. R10 zoning. Here we go. Get familiar with this. R10. That means in Orlando, long-term rentals or Airbnb are allowed. Marrero, congratulations. Congratulations. Congratulations, Marrero, and everybody else. Now you have everybody else thinking, hey, wait, I got to get in on this. Congratulations. I would have to say, if you are seriously considering that and you can get this property, I have to agree with you. I think even your 15K estimate is actually low because of the square footage in this thing, 2,000 square feet. And it's off of 192. In and out is not bad. You can get to Disney pretty easily, and you have amenities there. So you're not isolated like a true duplex or a townhouse where there's nothing there but a pool. At least you got the volleyball court. At least you have probably other amenities. I think that's worthy to investigate further. The only thing, though, is it doesn't – see, here's the thing. It doesn't have a track record. So that is the only thing when it comes to the bank, and they're saying, hey, is this really worth 1.2, when you can sit there and say, okay, what these guys are doing is saying we're going to rent at $2,000 per month. So they're good with that 77,000 number. The bank is probably going to be good too, because they're saying, okay, we're going to give a loan on 900,000. And what I'm going to do is I'm going to do this off screen, because I'm going to put in 900,000 at 4%. 30. I'll do 30 years, even though it's going to be amortized on 30 years. So our interest, it comes up, if we had monthly payments with including principal, interest, and taxes, it would be $4,297 a month, which would mean we're at $50,000 a year. But if we're doing interest only for 5 years, hell, for 2 years, if we're doing interest only, the interest is $600,000 over 30 years. So we're talking about $1,500 a month, something like that. $1,600 a month, $20,000 a year. Yeah, this is like a win-win. We can make 150, 140, pay our debt at 12 or 20,000 a year, pay these, let's call it 77. So we're at 97. So yeah, we got $50,000, $60,000 left over, and we have a $1.2 million property. And not only that, we have revenue coming in that makes the property worth more than 1.2. So now 6 months to a year later, I'll be able to take out 300,000 plus, wash, rinse, and repeat, right? So it's a win-win. We're off to the races. I like it, quite frankly. I like it. It's a deal, ladies and gentlemen. All right, let me know if you guys think it's not, but I think from all everything, yeah, it looks like they're saying bad deal, IBE water and electricity because slash 813 and a half. Exactly, KM. I agree with that. I wouldn't touch this with the 10-foot pole. So hopefully, unless you have some other news that we're not privy to, the numbers just don't make sense at that price point. I am going to look into this. Sounds like a great place to get in on. Yeah, Victor M. Exactly. It is. That's a good deal. I believe it's a good deal. No one would jump in if they don't have more meat from the deal. Right. Exactly. That's how it always works. Exactly. Especially if we're talking about the 750K from International Jocks, even if we're talking about that 430K, which that one doesn't make much sense. IBE, we need more info, because that doesn't make much sense why the guy's selling a 5-unit complex, $435,000. What state is this in? Because that's like, what is that, 90 Yeah, that's like $90,000 a unit, a door, as some people say. Agree. It needs to be short-term rental, but I don't understand the net expenses they show there. You also have to consider furniture, which can be another 100K. Yeah, Marrero, I agree with you about that. That's what I'm saying. The net expenses don't make sense. They're just stabbing in the dark because this 25% expense ratio, we know that's not normal. It's going to be higher than that. So when they come to 77, I'm coming down to net like 55, 60 best case scenario. So I don't know what they're doing that for, but I kind of know why. It's because any new construction, you have less maintenance. So that is probably why they're doing it. But personally, as an investor, I'm not looking at it that way. I'm like, there's something missing. And also, people have to think about there's several other factors always, because HOA, if they up and say, well, it's $250 a month, we were going to have that, and they included that, but by the time this is finished, it's $300 a month. You got to be careful on that too. So you just never know. But there's other little things that could pop up. But I'm not going to go with their number. I'm going to go with like what it should be. Expenses are normally 50%. Just go with 50%. So if they say it's 96,000 revenue, I'm saying, okay, after everything's done, we're really at 50. All right. Now, how you can minimize it, but Marrero's thinking about furniture and things like that because he's going to do a full-blown Margaritaville type thing. All right. $25,000 for each unit. Well, I don't know. I think that's a bit much. They already include it said it included the kitchen, right? I think it include kitchen appliances. So let's go see. I think kitchen appliances were included, right? Yeah. Air conditioning, heating, cable ready, dishwasher. Yeah. Washer, dryer. Oh, no washer. Stainless steel appliances. So yeah, it includes the kitchen. So that's out the way. That's some of the most expensive. Well, everything's expensive these days. But Marrero, if you're not gonna spend $100K. Not if you already have the kitchen, because I mean sofas, beds. You're not gonna have Tempur-Pedics in the joint. I don't think. So you're not gonna be spending no $1,000, $1,500, $2,000 for a bed. So that's out. You're gonna spend probably $500, $600. 4 bedrooms or 2. It doesn't matter. You're going to have to get beds. Going to have to get, I mean, come on, pots, pans. I don't see how it's going to be $100K, but it's going to be worth it though. That investment in itself, if you treat it like a straight up rental, I just see this thing generating, even if you kept the 4 units, like you said, if you can do $15K a month on the 4 units by themselves, that changes this whole thing into a $180K property. It's double the value. So now you're going to be making $100,000 a year profit. That's the way I see it. Let me know what you guys think. This is a hell of a deal, I think. I normally wouldn't say that, but I do know what we're talking about here. This is what we're talking about in Punta Cana area as well, and any other pre-constructions we're talking about now. You're on the east side of I-4. I'm on the west side of I-4 with Margaritaville, which is the newest area. Oh, you're on west side of I-4? That's where Margaritaville is? Wait, let me know if Margaritaville is it's not off of 192, is it? Let me know. Actually, I don't know where Margaritaville is in Orlando. I don't think I've ever been there. 15K sounds great. KM, exactly. It's all doable because he already has a property at Margaritaville that he's renting out there. So he has a perfect reference on what the worst case scenario could be. And if he has 4 units and he's on the east side, now he's getting 6 to 8, but he's at Margaritaville. That's a whole different ballgame. But if he takes 6K and changes, the 8K and changes it to half, which is 4K, now you have 4 units. That's 16K. So it's not unreasonable to believe his units would get 14, 15K a month, or even a range 12 to 15K. You're still at double what they think it should make based on their numbers. So if you change this to 150K, 180K, ladies and gentlemen, in case you're new here, please smash the like button. And if you like what we're talking about tonight, real estate for beginners, real estate investing, anybody can do it. You can do it. Hit me up in the comments down below. You can ask questions. You can always email me at eric@stopstrugglingnow.com. But like KM says, 15K, the high end, which that's even being conservative. I think it's conservative. Because look, I'm going to tell you guys like it is. I do timeshares, okay? In Orlando, I have the Orange Lake Resort. I just now up my prices into the $300 plus per night. I used to only do Fridays and Saturdays at $299. That was pre-COVID. Now I have it at $329, $339. Okay. He has townhomes and he has actual cottages, villas, and things like this. You can charge more than that. So, for instance, a whole week right now at Orange Lake for my 2-bedroom would cost somebody roughly $289 per night. That's almost $2,000. All right. That's for a whole week. He has and that's, yes, it's a 2-bedroom condo, but it's not 1,800 square feet or 2,000 square feet. They're only like 1,000 square feet. They're still nice, but it's in a resort and all that. That's nice. But what I'm trying to say is, if I can get $2,000 a week at Orange Lake, he can damn sure get $2,000 a week in a 2,000 square foot 4-bedroom place like this. All right. So the thing is, it's not out the realm of possibility that 4 units could generate even more than 4 times 8. He could approach $20,000 to $25,000, especially in summer, especially in Christmas and New Year's. You can charge even a little bit more, especially when March comes. There's certain times a year that you can actually get more money than normal. All right. So just giving you guys an idea, over the course of a year, it might average out a certain way. Might not be able to get 20 every month, but you can average 15. Seems like a reasonable thing. Some months you get 12, but 6 months, we're going to get close to 20. That's the way I'm looking at it. I'm going to get my partner to look at this, and we will see if we can pull the trigger. That's why I didn't want to show it. The key is to be close to Disney. That's right. He's got it exactly right. Location matters, ladies and gentlemen. This is not close to Disney enough. It's close off of 192 to get there, but it's not like it needed to be closer to I-4, in my opinion. But that's also the reason why we can't sit here and say it's going to get $2,000 a week, because it's not right by Disney. I would drive and see how long it takes to get to I-4 and Disney. Exactly. I'm anticipating from that location. It looks like, for me, I think you're going to see, we're going to find out how close I'm going to be. I think you can get there in 15 minutes. Actually, I think it's going to be a little less than that because you're by the turn. So no, with the lights. Yeah. Okay. I'm going to change it from that. Oh, wait, we got to go up the street, make a left. Okay. I'm going to put a range 12 to 15 minutes. I think that's how long it's going to take to get to Disney. It is damn good. Exactly. Wilson Koo. You got it. Wilson Koo knows numbers too, because he does the investment. Anybody else, let me know if you think it's a good deal. This Victor Marrero property that he's talking about, let me know, because it's a deal. You can easily get $1,000 a night for all units, and it can expect at least 20 days occupied. I agree. Could get about 20, 25K a month. Yeah, KM, I agree with that too. I totally agree, because the prices now have went up 30% more than I did 2 years ago. It's 30% more. I'm not 30, sorry. I mean 10% more than what I did. So when my 300 is now 339. All right, it was 229 weekdays is now 269. All right, so I raised everything like 10 to 15%, and people are booking them. All right. Isaiah Dumars, welcome to the Monday Night Live Stream. Thank you so much for being here. I'm late to the party. You're never late, man. You can always hit rewind. It's always good. Thank you so much for being here. And once again, everybody, please smash that like button. And if you're talking about any other real estate deals, let us know. But we found a gem right here tonight. Wilson Koo, the 435K one seems out of whack. That's correct. And too low to get in unless someone else is holding the paperwork. And you are a contributor for small returns. Exactly. I know I haven't heard back from International Jocks, but I would have to tell him, do not put 45K down. Do not do that deal, because you're going to put yourself in a situation, especially the way he was talking about giving up the 45K and then getting hard money lenders. I'm like, wait, you need hard money lenders straight out. But I don't know any hard money lender that would give him a loan for that little bit of money coming in. I don't see how that's going to work. Isaiah Dumars, okay. 100K is a bit excessive, Marrero. More like 40K. KM, hey, I have to agree with you on that. I really have to agree with you on that one. I don't see how we're spending, because they already have the kitchen appliances, which the refrigerators these days, if you want nice ones, they're going to be like 2 G's minimum. So we got 4 of those, so that's $8,000. Then we got dishwasher, another $600 for the nicer one. So that's another 24. So that's out the window. We don't have to pay that. You got disposal. Don't have to pay that 150 for those. You got the only thing missing is washer and dryer, beds, sofas, and things like that. I agree with KM. Go see RC Willie's, my man, and get your stuff. Go to the back room in the clearance section. Go get that stuff that people got to their house, didn't fit, or didn't like the way it looked, and then they sent it back. There's really nothing wrong with it. That's where you get the furniture at, and that's where you get stuff at 50% to 60% off if you have RC Willie's in Orlando. All right. 4 units for 1.2 mil, Isaiah Dumars. Hey, you know how this works. It's 4 units or 8 units. But how it works is, does the numbers make sense? So, Isaiah Dumars, since you got here late, let me pull up something. This is what we're talking about right here. All right? If it matters about, I'll have to get you off the screen so you can see. If it matters about the cap rate, which it doesn't, 4-unit apartment building offered. You can see it here. I didn't realize they had the 1-car garage. So you have a few amenities. This isn't built yet. It's pre-construction. So these pictures are just renderings. These are 2,000 square feet, roughly, 19-something to about 2,000, 2,200. But anyhow, just call it 2,000 for even. All right? They're saying they're like 4 bedrooms. The beauty of it is you can turn this into, it appears you can either make them, I really can't tell. They're saying you can make them into 8 units because, of course, you can make each unit 1,000 square feet. But then where are you going to get the extra kitchen, right? So it might have to stay a 4-bedroom. But we didn't go this deep with the pictures, but here you go. Here we go with the floor plans. So not bad. Upstairs, downstairs. Not bad at all. All right. So this is what we're talking about. Brand new. It's supposed to be built 2020 September. And it says 4 or 8 units. So you got to go over there right now and tell them you want 8 units if you want them to split these, right? So I'm assuming this would be half. So each unit would be almost 1,000 square feet if you split it into 8 units. But the question is, how much can you rent? Is it worth it to split it to 4 units or just keep it to 8? The way Orlando is, it might be, it's whatever the investor wants to do. But anyhow, this is the numbers. $300,000 per unit, of course. It's a B class is what they're considering it because it's on the east side. Let's go. Here's the numbers down here is what they're claiming. Here's the rent numbers. based on the 2,000 per unit, that's 96,000 revenue. They're coming up with 77,000. We don't know how with this net operating income. So to me, that wouldn't be such a great deal if all I'm getting is $2,000 a month. But here's what we're talking about, Isaiah. We're talking about what happens if you turn it into vacation rentals, which they allow, according to our R10 zoning. Airbnb vacation rentals are allowed. So now he already rents at Margaritaville, and he gets about $6,000 to $8,000 per month from his Margaritaville. His Margaritaville is on the west side of I-4. So it's over here. And on this side of I-4 is where Disney is. Disney's right in here. All right. This is 192. Disney's here. So, and the other locations, that's John. The other locations, water, the water, what do you call that place? I'm trying to think. SeaWorld. SeaWorld's up in this area. All right. So he can take John. It takes you here up a John Young Parkway, believe that is. So he's in a decent location because where this diamond is, it's a further down a little bit, but still off of 192. That should take about 12 minutes to get to Disney, 12 to 15 minutes to get to Disney. All right. On a crowded day. So if he's able to rent his other property over here at $6,000 to $8,000 a month, and it's only one unit, if he did that at this property, that would mean we'll go on the low side, 6,000 a month times 4 is $24,000. That means the 1.2K is worth it, because he's going to have revenues over $200,000 a year if that was the case. And that would be a bargain at 1.2 million, because that means the property's worth over $2 million. See where we're going with this? So that's how we come up with this. Normally that would be wacky, but if you can make it that kind of number, 4 units, right? It works out. 4 units for 1.2 mil to rent. I don't like that number, but changing it into a rental, Airbnb short-term rental, you got it. Yes, Margaritaville is right of 192. I am only 10 minutes from Disney's gate, only 4 traffic lights. Oh, yeah. Down there. Yeah, I know. I didn't know Margaritaville was down there, though, but that's cool. Coming from that other side, it's easier to get to Disney. How would I buy a foreclosure house with putting a percentage down? Okay. Isaiah Dumars, I can't answer that question. I can't answer this question because you're saying, how would I buy a foreclosure house with putting a percentage down? You can't. You're going to have to go you're going to get a loan from somebody. So you're going to put 20% down, 25% down, and you're not going to have revenue coming in. So that's why it makes it a little bit harder, because you're not going to have revenue from a foreclosure. So now I can't have any, maybe somebody else will have a suggestion on how you can do it, but I'm just going to tell you, you're going to have to find an investor, and you're going to have to talk to them. Like, how much is the foreclosure, right? And how much is the property actually appraised for? So I'll give you an example. Let's say you found a foreclosure and all the homes in the area generally sell for $250,000. But the foreclosure has an IOU, or you can pick it up for 125 or 150. Let's say 150, right? So you're sitting there saying, well, how can I get a foreclosure? Well, this is the conundrum that everybody has. You're going to have to go find investors. That's what you're going to have to do. There's no way you're going to be able to go down to the bank and say, hey, I want to give you $20,000 for a foreclosure, because otherwise, if it's single family, then that's just like you buying it. But unfortunately, foreclosures usually are time of the essence. So you don't have time to do this formal type loans and things like that, waiting around a week or 2 or 3 to make it happen. So again, you're probably going to have find investors for that. Maybe somebody else will chime in, because I don't usually mess with foreclosures, quite frankly, because there's other things you can do, like what we're talking about here. If you go to loopnet.com, you can find properties that have tenants in it already. So that gives you now all you need is 20-25% down, and you can find investors because you have revenue already coming in. It changes the dynamics. You only have to rent at $300 per night for just 15 days per month, and that's over $15K per month. So $15K is very conservative. Yeah, exactly. I agree with you. The $15K is conservative. That's what I was saying. Because if we go by what possibly is going to happen, you could do on the low, even if we did 5,000 per unit, that's 20K. So 4,000 per unit is 16K. And now we're under. Your 15K is so conservative that we're talking like 3,500 per unit. Roughly 3,700 per unit, that's pretty low. As you know, I don't even think in your Margaritaville at any time would probably be 3,000. I don't see how that would be, because I can already tell you at my 2-bedroom at the Orange Lake, if I wish I would have had more than one. I only have one of those. I wish I had more than one, because if I had another unit there, I would be able to do double. So if I had 4 units, it would be crazy. Foreclosure usually auctions, bro. Cash money. Yeah, KM. Yeah, but what he's referring to probably is, you know how it works with real estate. Somebody will get their default notice, then 3 months later it'll be in foreclosure. So you have that little window, but it's not even worth messing with. In my opinion, I don't like messing with the foreclosures. But again, maybe somebody else will chime in. Agree, Eric and KM. I was thinking Margaritaville furniture. Don't need to go there. No need to go there. But yeah, you don't have to go to Margaritaville, man. They do things totally different. That's why people pay. But I do understand you want it to have that luxury feel. But that's why I'm saying don't go Margaritaville style, but go still nicer. I hate to say high end, because I don't want to say high end, but you don't want to buy cheap furniture. That's for sure. You do not want to buy cheap furniture when you have a nice place. So again, Marrero is in pre-construction in Punta Cana, Dominican Republic. I'm in pre-construction in Dominican Republic. We both, his I think I don't know if his is furnished in Dominican Republic. Mine is not furnished. Mine is like this one here, where we have a kitchen, and then I have to furnish it. So I have penthouse units. So I can't go to IKEA and go to IKEA in Dominican Republic and use that furniture. I'm not doing that. The reason why I'm not going to do that is because the same reason Margaritaville gets their money and gets their rental money and people keep coming back is because it's a upscale. It's above normal. All right. So that's the first. If you want to get good rents, then you have to have above normal furniture. Your property has to look above normal. That's another thing about real estate. You look at, if it's run down, you got to paint, you got to fix up, you got to make sure your flowers are looking sweet. You got to make sure your grass is looking great. You have to make sure everything, when people see the curbside and they roll up, they're like, oh yeah, this is going to be a great stay. Then when they open the door, they look at the furnishings and they're like, oh, this is awesome. Now they're willing to pay you whatever you want. All right. Those are your 2 keys when you have real estate and buy real estate and you plan on renting things out. You want to make sure that your property values inside your house and outside the house, when people roll up, they're going, oh yeah, this is cool. I'm glad I rented this place. I'm glad we're staying here. And when they leave, you want them to go, oh man, I want to come back. And that's why you do not put cheap furniture in vacation rental properties. A lot of people get away with it. They try to do that. And I'm going to give you a perfect example. In the Dominican Republic, I stayed in a cheap property the first 3 nights. I couldn't resist. When the girl said, I can't remember what it was, $20 a night or something. It was something stupid. And so it was a 1 bedroom. But in that 1 bedroom, we have a kitchen table that is almost like, again, IKEA probably. Some cheapy kitchen table. You had propane for the range. Literally, like we have barbecue grills with the propane tanks. That's what they had underneath for the propane, a tank underneath. You have water that takes a while to get cold. I mean, to get hot. And just little stuff that it didn't make things bad, but it was just like, okay, I'm glad I only stayed here for 3 days. So since I didn't know the area, I always do that when I go to a place that I don't really know. I book a place 2 or 3 days. So then once I get there, I find out, okay, now I need to find out where I'm really going to stay. So then after that day, then I stayed at a condo that was awesome. Okay, a big difference. Everything was normal, right? I paid more, but it was worth it. And I was right up from the beach, across the street from the beach, literally. So that kind of thing right there is what you have to keep in mind when you do real estate investing. Any upgrades matters, except for when you add a pool. Does not matter, okay? That doesn't help. People think adding a pool helps. You know, when a person, what people care about? They care about the kitchen. They care about the bedroom. All right? Those are things they care about. They care about the living room. It's kind of like in those orders. All right? But your kitchen needs to be on point. Bedroom where they're sleeping, master, needs to be on point. Living room needs to be on point. Straight up. All right. And if you're not willing to do that from a real estate investment standpoint, then you're not going to be able to improve the value of your property fast enough, nor if you're doing vacation rentals, be able to get enough renters, because once the word gets out from the reviews, they'll say, hey, the furniture was lacking. You know, you want people to say, hey, I love everything about this place. And now you move up in the rankings because people are trying to get there. All right. Marrero has a 2-bedroom, awesome location. I have a 2-bedroom penthouse, awesome location. I'm using the word penthouse because it is a penthouse. So I can't have people come into a penthouse in freaking IKEA stuff. Okay? Ain't going to happen. Not going to happen, period. So think about that, ladies and gentlemen. Lots a lot, bro, and Victor Marrero. I figured. Exactly. Wow, nice returns. That's it exactly. It would be. Awesome returns on that. Margaritaville is off 195 on your map. You showed is on the left side. So off one. Okay, let me go see where this. Let me go see something. Margaritaville, Orlando. Is it in? It's not. Oh, is it? Yeah, it is in. I guess it is in Kissimmee, right? Let's go find out where this place is, man. Let me go look in the map. Let's go see where this is at. Let's go see where Margaritaville is. Man, look at that. That's cool. Oh, it is on the left side. I mean, it is on the right side. You said west side. Is this it right here? Oh, that's sweet. Okay. Well, here we go then. So you said, and by the way, the other place is around here somewhere. Oh, no, wait a minute. Okay, hold on. Let me take this down. Okay, here's I-4. So the other place is right here. The one we were looking at is here. Margaritaville is here. So that's how close he is to Disney. Oh, okay. I know where this place is. I know where this place is. I didn't realize they called this Margaritaville. Okay. Because you can see the cottages off of 192. Nice. Very nice. Okay. I like that. Usually foreclosures aren't bought with percent down. The note belongs to the bank, so it's best to deal with the bank directly. Geronimo Davidson, thank you so much for being here on the Monday night live stream. And he just said it best right there. Exactly. That's another reason. I understand what he was trying to say. But again, Geronimo Davidson, he has the exact wording for this. Don't even bother. Deal with the bank directly. And quite frankly, once you get into becoming a real estate investor and getting into game and know people, you'll find it very interesting. Banks sometimes will work with you, especially when they're foreclosed on somebody who hasn't paid for 6 months to a year. All right. So that's it. Good night, folks. I'm late. Geronimo Davidson, you dropped the gym. No, that's not late. I thank you so much for being here. Appreciate it. Banks won't do. If you have LOC, then borrow from that to buy and then wholesale at less than market and get your money back. Line of credit. Yeah, you could do it that way. Yeah, I could see that. Cheap look means less care of your unit by the renters. Exactly, Wilson Koo. Very well said. Melanie Bonita, Miss 24 Streams of Income is in the house, ladies and gentlemen. That's right, you heard me, 24 Streams of Income, and you can go see her books on Amazon. You see her name here. You can go there and get her books. She also has a YouTube channel as well, and she's on Clubhouse. If it's really nice, they will even refer their friends and family. That's how it works, Melanie Bonita. That's exactly how it works. Because I rent out my Vino Bello, which is in Napa. It's a 5-star resort, condo hotel. And because it's fixed up like a 5-star resort, friends of friends call me up. And because I give them prices 30% less than what the hotel charges, you best believe when it costs $1,100 per night on a weekend, and then people can call me up and I charge them $799. Yeah. And then they go there and hang out, and then their friends are like, wait, they only charged you $800 and that thing costs $1,200 a night. On the weekends, $1,200 a night. On the weekdays, it was $599, I believe. But yeah, she's right about that. What? For your Punta Cana penthouse, you need to get Italian furniture, French cabinets, special toilets from Spain. Anything less will be unacceptable. Oh, that's funny, Marrero. That will not happen. 100% VM on that Punta Cana furniture move. That's right, Geronimo Davidson. You got that right. Yeah, man. Yeah, it won't be none of that from Spain and French toilets. Oh, that's funny right there. Man, oh, man. All right, ladies and gentlemen, we're 2 hours into this. Please smash the like button. And if you like what we talk about, please subscribe to the channel, because tonight's very special real estate investing for beginners. Hopefully you guys learned a little bit about it. And in case you just came in late, you can always rewind as I go over some of those terms, cap rates, and I go over the DSCR, debt service ratio, So we talk about that. As far as lenders go, once you build a relationship with your local banker or a good broker, the sky's the limit. That's what I did back in the day. Geronimo Davidson, exactly. He knows exactly what I'm talking about. Because once you get in the game, so to speak, and you start dealing with multiple people and they see you and they find out you ain't BSing, all of a sudden deals come up. And I'm going to tell you guys a deal back in the day that happened. I don't do investing like I did back in the day, because I'm more in the vacation rental space now. Because there's no reason. All I do is sit here and accept, deny, accept, yes, and that's it. I don't have to go out here doing all this stuff. But the story is, just like Davidson said, Geronimo Davidson said, when you do enough business with the bank, and what I mean by enough, it could be like 2 or 3 deals, but they know they can call you up with something, and they know, oh, this will work for Eric. And this is what banks have done in the past. They probably still do this. Foreclosures. They have foreclosures on their list that they just got the property. They'll tell you, oh, you know what? We'll just carry the paper. Just give us 10% down and you can have it. Literally. Just like that. Just give us 10% down and we'll write you a loan. No qualifying, no nothing. See you. Of course, they know the property's jacked up, but hey, they don't have to fix it up. They know I'm going to have to, right? They know the grass hasn't been mowed in 3 months. I got to. Follow what I'm saying? So it was worth it to them. They're just like, okay, well, we know he's going to probably put tenants in there, and we know we're going to get paid. He's never screwed us. Right, because every time I get something, I sell it. I'm just like, I'm selling it. As soon as the property, I get it fixed, we moving it. They get their money, usually within months. So that's how we do it. But he's right. And that's how you have to be a real estate investor. You have to go get your brokers, deal with banks. Don't be shy. In fact, you might even deal with other investors, real estate investors that you normally are competing against. But all of a sudden, you come in friends, and all of a sudden they start talking, saying, "Hey, did you know about this new deal?" All kind of stuff happens once you actually become a real estate investor. And by the way, if you are going to be a real estate investor, I might want to say this: in 2021, you're going to want to have a LLC. Start an LLC. All right. The reason why you can do that is when I talked with you about loan guys earlier today, if you have an LLC, they like to have it under an LLC, an EIN number. All right. So that's all I'm going to say. They like to have an EIN number, the loan guys, where you guys know you can put 25% down, no loan docs, no bank statements. There's a bunch of stuff they don't do, but you need 25% down. FICO score 650. All right. So that's all we're going to talk about. And we're 2 hours in, ladies and gentlemen, in 15 minutes. And now we're almost going to call it a night. So if anybody has any further questions regarding real estate investing, please let me know. But Marrero gave a gem tonight, a hands-on deck real estate deal that clearly is a deal, even at 4 units at 1.2. And the reason why I know it's a deal is, like I said, my 2-bedroom at Orange Lake Resort, which is a timeshare hotel that I rent out, I can get, let's see, I haven't even done the numbers because nobody rents a week for me. They usually do like 4 nights, but at roughly it's $300 a night on average. All right. So a week is $2,000. After they take their 3.5%, it's still $2,000. All right. So let's just call it $1,900. So if I can do that at Orange Lake, I'm pretty sure I can do the same thing with another property that's bigger, a 4-bedroom instead of a 2-bedroom, twice the size, 1-car garage versus no car garage. But yeah, I have amenities at Orange Lake. This is true. Lazy River, restaurants, things like that. But it almost equals the same thing. So I can see where this units could get $6,000 a month easily each unit. So you do that 4 times 6, 24,000. Now his property's worth double. It's worth 2.4 at that point. So hopefully you guys understand what I'm saying, and hopefully I explained this properly tonight instead of listening to this other crazy nonsense. No problem, Wilson Koo. Thank you so much for being here, helping out as well with the information. I appreciate that. Thanks for all the knowledge and all you give back. Much appreciated, bro. Thank you so much, KM. Everyone stay safe and blessed. Wish you all get that money. Good night. Thank you so much, KM. guys, let you know we're um, so I'm gonna do closing right now in the dark. So I want to thank everybody for being here. Thank you for your patience in this live stream. And